Hello, Fredak here. Fred ACC, all one word. Alrighty. It is Friday, April the 11th. It is about 8:30 East Coast time, 11:30 a.m. East Coast time. XRP is at about $2. First up, I'd like to thank you all for being here today. We're going to try to cover some different bases, iron out a couple of different things. As always, this is not financial advice, just the ideas that are swirling around in Fredak's head. Be that as it may, I think I already told you, I thank you all for being here today. I hope you're all having a wonderful day. I think today's posting will be found to be very interesting. Once again, Fredak tries to bring you what the other talking heads don't bring you. And I watched a bunch of them earlier this morning. For about 2 hours of them. Interesting. They've all got some kind of a hook, some kind of a twist to them. Probably why they have 263,000 subscribers. And I have barely 3,000 subscribers. But that's okay, because I've got future millionaires. And I'm going to allude to something about that momentarily. Alrighty, so it is Friday, April the 11th. It is about 11:30 a.m. East Coast time. I wanted to touch base on my losing trade the other day. I put my cover from going long on the stock market in before noontime. I was getting the 4 o'clock close. At that time, the stock market was up, a fat 1,000 points. But it all drifted away. Not a good sign. If I had the ability to cancel it, I would have, thinking that at some point something was going to have to be mentioned that was going to soothe the markets, and there would be the relief rally, which happened the next day to the tune of 2,900 points. Still, there is a lot going on out there. There's a lot of choppy water, in my opinion. Again, these are only the things that are in my opinion. My opinion is just that, my opinion. You guys out there have brain cells, functioning adults who have to formulate your own opinions. One of the first things I want to mention in here is to watch out for the scammers. The scammers are proliferating at a tremendous pace. They are swarming. Anytime you have anything with money involved, the scammers will come. And some of them will come in sheep's clothing, even though they are a wolf, trying to devour you. They'll be trying to offer you some kind of service. I'm here to help you. Might have been Ronald Reagan that had said it. The most dangerous words you'll ever hear are, "We're here from the federal government and we're here to help you," or something like that. I'm paraphrasing it. Alrighty, with all that being said, so I did end up closing out my short-term trade and losing money on it. I guess I had a bit of a swelled head. I thought. Thinking is not so good. It's what actually happens that really matters. What you think and what you all conjecture. I ended up losing a little couple of $1,000, maybe 3 of them. Not happy to do it, especially when the next day it rallied 6%. I would have made a decent amount of money, but it is what it is, and I'm out now. I'm on the sidelines. For now, I have my XRP. Okay, so let's go into Donald Trump. President Donald Trump. He's playing a very interesting game. These are my opinions of chicken with the rest of the world. He's trying to level the playing field. Again, these are only my ideas swirling them out of my head. You're all welcome to have the same opinion, different opinion. It's all good. I look at it this way. He gets to enjoy the luxury of being a little bit of an unknown, even though he served one presidency already. Or maybe he gets the advantage of being a little bit of a loose cannon. So he's proposed these tariffs to try to level the playing field towards U.S. companies that are sending their products overseas. Trade imbalance. And in doing so, he's disturbing the ire of the sleeping giants of the rest of the world, mainly those who export a lot of their product to us. They're not going to take this very well financially. Of course not. But let's revert back to the president's position. If he backs off on it, then he shows weakness. And he certainly cannot do that. So I would expect that over the next 60 to 90 days, there's going to be some choppiness to the financial markets on almost a daily basis. Whatever word is mumbled from the administration or from foreign administrations, the markets react. Irrational exuberance. If you remember that, it goes back to the days of Greenberg, who was the Fed chairman. He was the one that mumbled it, and the stock market had a huge drop when he said that with the dot-com era. I think it was the late 90s. I think so, but I might be wrong. And of course, you should always fact-check Fred Ack and everybody else that you listen to, because the final decision needs to be made by you. So going back, I'm bouncing around a lot. Mr. Trump, President Trump is in a position where I don't think he can acquiesce too much and back down too much. He has to show a certain amount of strength to the foreign nations that he means business. This is for real. Hopefully he can enjoy the respect, or how do you call it, uneasiness of not knowing how to play him. Whereas other leaders of the free world, you could make better judgments, possibly, on how they're going to react to certain things. Whereas, as I remember it, Ronald Reagan was a president that wasn't so easy to read him. When he told them in Yemen, you better release those 39 hostages, I'm moving the 6th Fleet off of Yemen, they understood. They feared him. And they released all 39 hostages. Check that out in history. Fred, I could be wrong about that. Okay, so what I've noticed is that most of the clickbaiters out there, the ones that have massive amounts of followers, which I don't have, I just have future multimillionaires. And I'm happy that I have all of you with me. And I'm not pandering to anybody in the future. There's no more shorts going on out there. And I'm not trying to grow my fan base. I'm not getting anything out of it anyway. Not financially. I get the enjoyment of knowing that I'm helping some of you find financial freedom. When, I always say when XRP runs. I personally think it's a huge long-term play. Not that long either. Things could change very quickly. Now, someone out there could comment down below and say, Fred Ack, you said you bought it at 37 cents. What do you care? It's at $2. That is true. But the reality is, whether you buy something at 37 cents or you buy it at $2 or $1.30 or 90 cents or at $2.90, what do you think is going to transpire in the near future? Look at the tea leaves. There's no guarantee, of course. If some huge entities out there as a conglomerate group said, we're going to rise this XRP to double digits or triple digits, meaning $12, $13, $87, $187, everybody would buy into it. It would just go, it would go up like hitting the 3 bars on the slot machine. What I've found is that I could go on here and tell you XRP, 1 million XRP, 10 million XRP going broke, blah, blah, just clickbaiting. And there's so many out there, breaking news, And the reality is, some of them seem here or there like they know a little bit about the specifics. I don't see anybody really talking about the big picture. And let's go into the big picture. The big picture is the big money. Alrighty, so let's be very straightforward. This is what you're subscribing for. This is what you want to kind of roll around in your head. The big money controls the agenda. That's the way that it works. Always has and it always will. The reality is, why do the big banks get involved with credit cards? MasterCard, Visa, these companies, American Express, to make money. And credit cards are a very viable thing, especially for U.S. citizens. They love to carry debt. Why? U.S. people, they want everything now. I'll pay for it later, but I want it now. Okay. So you buy that $1,700 washer and dryer, you pay $37 a month for the next 19 years. You paid for it 4 or 5 times over. But people in the U.S., they don't care about that. A lot of them anyway, and that's why there's a tremendous amount of credit card debt that's going through the roof. Another one of the canaries in the coal mines, in my opinion. So let's go back to the big money. Where is the big money going to gravitate to? Well, they're going to gravitate to something that can make them money. And shortly down the road, very, very shortly, they are going to start to notice that trying to make 2-3 cents on a million XRP trading through my site, okay, I'm bringing in X amount of dollars. But if I can have 12 to 13 to 70 billion of them go through and I make a tenth of a penny, I'm making a whole lot more money. A whole lot more money, not penny. Analogy. I bump into any of you out there, you're at the beach selling hot dogs. And I say, wow, Jimmy, you're out here. Yeah, I come out here 4 hours every Saturday, sell some hot dogs, make a little extra money. Alrighty. How much does the hot dog and the roll cost you? The hot dog I buy bulk, the roll's bulk. Cost me about 10 cents. Alrighty. How much is a hot dog? You say it's $2. Okay. In the 4 hours, about how many hot dogs do you sell? Usually sell about 100 of them. So the cost is 10 cents each, 100 dimes. It's going to cost me about $10. I'm bringing in 200, so I'm making a $190 profit for my 4 hours. And I say, Jimmy, why don't you think about lowering the price to $1? Maybe you'll sell a lot more hot dogs. Yeah, but if I do that, I won't make as much profit. Well, okay, it's your business. You do whatever you think is best. I bump into you about a month, 6 weeks later. Jimmy, what's going on? Listen, I gotta tell you, I lowered the price to $1 that next weekend. That Saturday, you know how many hot dogs I sold? 700 of them. You sold 700 hot dogs? Oh, they were flying like hotcakes. Really? So 700 dimes is gonna cost you $70. 700 $1 hot dogs is bringing in 700. So how much profit did Jimmy make? He made $630 profit, a lot more than the $190 profit. And that's where the scale of numbers comes in, which is going to, in my opinion, is going to bring in the big money to the ETFs, regulation. It's all coming this way. And when it does, you better look out, because there are so many different use cases for XRP or XYZ or whatever it's going to become. By all means, if something else jumps out of the frying pan and that becomes the functionality, the adoptability, the go-to instrument, I will be on here telling all of you, look, I'm liquidating my XRP and I'm moving it all over into bobbity. Hope that all makes some sense to you. That's not the stuff you're going to hear from the big money people. Not the big money, the big subscriber people, all the talking heads, all the clickbaits, breaking news. All I see is XRP breaking news, Bitcoin breaking news, Bitcoin 1 million, XRP 1 trillion, blah, 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 blah. Bottom line is Bitcoin is at what it's at, and XRP is at what it's at. Now, I don't see a lot of volume. That's a whole other area. The volume is so light. That tells me something, and it's holding at $2. Not going to take much in the way of news that all of a sudden, up, 260, 270, 280. And by all means, if somehow my crystal ball wasn't broken, which it is, in XRP, if I knew it was going to be down to $2, I'd have liquidated all mine above $3. And I'd rebuy 1.5 times what I owned. But it is what it all is, and you just don't know when the turnaround's going to happen. And I think the functionality of that is going to step in, and I think $2 is a great opportunity. I know somebody have commented, but Fred Hackett told me at $2.40. I'm not selling mine. Actually, I'm buying more. I bought more the other day, and I posted that on here at $1.82. Got completely ripped off on. And they all seem like they have decent spreads. And if somebody's aware of where is the trading platform for these things, and I'm going to try to figure out if there is a game plan. I got to get that chalkboard out here in the background to start showing you the bid and the offer and the game within the game. I could try to go into it right now, but it's going to be time consuming. But I'll go into it very, very quickly. Had a block trader friend of mine. He's a block trader, traded huge blocks for Bear Stearns. He was on the top shelf, the top tier of the block traders. I went to visit him one day, and I was just a measly low-level broker at some boiler room during the NASDAQ era of the 90s. So he pointed out to me that he said, I'm in charge of the beverages, the autos. So he had General Motors, Chrysler, he had Coke, Pepsi, Budweiser. Any big block trades coming through, they would call directly to him and they would say, look, we're going to look to try to lose 80,000, market not held, meaning do the best you can. So if it was Coca-Cola, let's say it's at 52 1/4. This is back in the days of 8s and quarters. Yes, there was teenies in 30 seconds, but the standard bid offer on most of the large cap New York stocks were 8s and quarters. Quarter spread was the norm. Coca-Cola KO, I think, was the symbol. It could be bidding 52 1/4, offered at 52 1/2. If you own some, you could get online and put yours out there at 52 1/2 to sell. Or you could undercut everybody and put 100 for sale at 52 3/8. You're now an eighth below. You are the highest offering. Doesn't mean you're done. Someone would have to buy at a limit price of 52 3/8, or they would have to buy at the market and they would take yours away. The way that it works on bids and offers on limit prices is that if you put yours out there, first up, the system is going to know, do you actually own this amount, or do you have the capital to purchase this amount? And if not, they're not going to let you even enter the trade. So let's just go with the thought that you do own, let's say, 1,000 Coca-Cola. You want to sell 500 at 52 3/8. You're going to undercut the highest offering price of 52 1/2. So you will be the highest offer at 52 3/8. Now, a moment later, you could have other limit offers that join you. They come swarming in, a lot down there, or somebody could just grab yours, or somebody buys at the market and you're gone, and it's back to 52 1/4 bid, 52 1/2 offered. So he would sit there and he would take orders from people, whether it was Vanguard or whoever it might be. Now, they're not going to tip their hand to him because they know that everybody out on Wall Street will slit your throat for 1/8 of a point, which is 12 1/2 cents. On 10,000 of them, it starts to add up. So what he would do is he would accept the order, he would work the order and try and sell it. When it was done, he'd call back, hello, Billy, over at Vanguard. Yeah, the 80,000, I got rid of them at 52 1/4. AWOP, the average weighted price, 52 1/4. They say, okay, thanks. Look, we want to try to lose another 200,000. Market not held, meaning do the best you can. He would repeat it back. It would be tape recorded, and he would start to work the order. So once he got rid of that order, he'd call them back and he'd say, Billy, it's so-and-so here at Bear Stearns. The 80,000 are gone, the 200,000 are gone to the Coca-Cola. Average weighted price is going to be 52 and an eighth. They'll say, okay, thanks so much. Send me all the paperwork, all the confirmations, all the back office paperwork. Then they might say, look, we want to try to lose another 300,000. He doesn't know how much they're selling. They might be selling 2 million throughout the day, and they'll just keep giving him piecing it out to him. And he might turn around and say to them, alrighty, you want to sell 300,000 Coca-Cola, market not held. And they'll say, absolutely. And then he'll say to them, do I have the ability to add some to work the order? And they'll say, sure, you could buy up to 100,000 of them. What that means is that Vanguard is giving him the ability to purchase up to 100,000 shares of Coca-Cola, KO, at whatever price to try to get the herd moving in the other direction, to try to get the price running up, and then he'll start to feed some out at the offer. It's the poker game within the poker game. The game within the game. So naturally, if he's trying to sell 300,000 Coca-Cola for a certain entity, let's say it's Vanguard or it's whoever it might be, he doesn't want to tip his hand that he's a constant seller because no one's going to bid for it. So he's going to flip to the other side of it and try to bid or buy from the offering, try to send the herd running. He'll speak to the specialist down on the New York Stock Exchange floor, and he'll say, look, what do you got on Coke? And he'll say it's 52 and a quarter bid, 52 and a half offered. He says, okay, how much you have there at a half? He says, I got about 6,000 shares. What's behind it? I got 4,000 shares at 52 and 5/8. Then I got another 3,000 at 52 and 3/4. And I got 10,000 at 52 and 7/8. Then at $53, I have almost 200,000 shares offered for sale. So my friend would say to him, I'll take the half, I'll take the 5/8, I'll take the 3/4. He's starting a visual stampede to the upside. And then he'll say, he'll take the half, the 5/8, the 3/4, and the 7/8 stock, which in total might be like 19,000 shares. And then he'll say, the moment that is done, the bidders will bid up on it, up to like 52 and a half, trying to grab some, thinking there's some kind of a run going on to the upside. And then he'll turn around and patch right through to the specialist and say, look, put 4,000 for sale at 52 and 7/8. As soon as that's gone, he'll call him right back down and say, put me on for 11,000 shares at 52 and 7/8. So he's selling he's going to start feeding out as much as he can. If a large bidder comes on at 52 and a half, if there's a bidder there for size, let's say 80,000 shares, he might say, well, tap the 52 and a half for 80,000. Thank you, Richard. Don't know if that makes any sense or not, but that's how the game within the game works. And I would ask him on the sidelines, so while you're taking all these orders from these large institutions, what else do you do during the day? He says, well, because I tend to trade fairly well, Bear Stearns, Ace Greenberg, gives me the ability to buy and sell from their personal account. So when he sees an opportunity on Chrysler or on Coca-Cola or Pepsi-Cola or a Budweiser or whatever, he'll start the ball rolling and chop some 8s and quarters, on 30, 40,000 shares, quarter of a point on 10,000 shares. Starts to add up, it's $2,500 on 40,000 shares. It's $10,000. Net by the end of the day, he says, day in and day out, I just grind money. Now, where's that money coming from? It's coming from you and I. It's coming from the small people. Just trying to open up your minds to give you an understanding of how the trading world works out there. And that's the same game that goes on in the level 2 of the cryptocurrencies. There are big entities that are looking at how much is bid, how much is offer, what kind of size is there, what kind of a spread is there, what's behind it. If I get a run going, I grab these here, and then I start to farm mine out and offer them out on the offer. But once again, there are things that you can look for on the day trading world, which I look to get into very, very soon. Full-time job, got kids, I got a lot going on. Don't we all? When it comes to the stock market, you can look for group strength, you can look for volume, you can sail your sailboat on a day where there's a little bit of wind, not too much wind. You don't want to go out in a typhoon, and you don't want to go out when it's a sheet of ice, because with no wind, you're just going to sit there on your sunfish and it's not going to move unless you paddle it. So there are certain things that you want to have lined up in your favor for you to get off of your two hands, which are underneath your two thighs, and you say, let me get involved here. Let me buy 100 shares of this, or 1,000 shares, or 10,000, or 3,000, whatever it might be. That's the advantages that you could look for in the stock market world. Why the stock market? Because there's trillions of dollars of liquidity slushing around in there. Right now in the crypto world, there is not trillions and trillions of dollars of liquidity. I guess the most prevalent one is going to be the Bitcoin. But even then, it's at such a price that most people can't get involved with it. And I don't think that they have leverage out there. And I don't know what your advantage would be. What different factors you could look at to say, wow, if I get these 3 items or these 5 items or 7 items on my side of things, I'm going to look to go long on XRP. I'm going to buy XRP to go up. Whereas with the ETFs, that is going to change the game, and those are coming. They are coming soon. And with ETFs, there's no more gouging for 3 to 4 cents on to buy, and no more gouging on the 3 to 4 cents to sell. You're just purchasing the ETFs, getting best price. How does that work? It works like this. Let's say XRP is bidding $2 and a penny, and it's offered at $2.02. And I put mine in to sell it at $2 and a 2.019. The next person that wants to buy some at the market, mine is the best price out there. They should not be paying $2.04. They're getting the short end of it, and the seller is getting the short end of it. And something to always remember. Always have to remember, when you're buying a stock or a crypto or whatever it is, piece of property, someone is selling it. They're on the other side of that transaction. For whatever reasons that you think this is a good opportunity to buy, there's somebody out there that thinks this is the best opportunity for me to sell. And of course, there's other different factors going on. If you're a Vanguard and your tech fund owns, I don't know, 17 million shares of Apple, it's going to be hard to sell 17 million shares of Apple very quickly unless you choose a very busy day or any particular stock, any particular company. Apple probably trades 240 million in a day, so maybe that's a bad example. But let's say you have a stock that normally trades 4 or 5 million shares in a day. Well, if your group has taken a large position and you want to liquidate, I don't know, let's say 11 million shares, it only usually trades total back and forth 4 million in its volume, you're going to have to pick a day where there's some kind of really good news to the upside so that you can feed yours out and not cause a panic to the downside, because everybody will run. You have to understand that. Let's say you have a certain stock and it's bidding 52 and a quarter. I'm using the quarters and eighths as an example. 52 and 3/8 offered. And you see a large amount for sale at 52 and 3/8, say 400,000 shares. A lot of the people that are bidding at 52 and a quarter, 52 and an eighth, 52, they start to scatter, cancel, cancel, cancel. There's a large seller out there. Now, they might only flash it for 2 or 3 seconds just as a scare tactic to see the reaction. But once you post that out there, you are held to it. If somebody else out there, some other group, Goldman Sachs has a buyer and they were looking to buy, I don't know, 15, 20 million shares. And they're like, wow, 400,000 for sale at 52 and 3/8. Tap, done. There's no backing away from it. There's no calling up and saying, oh, gee, I made a mistake. I really didn't want to sell it at 52 and 3/8. I really didn't want to buy it at 52 and an eighth. You are locked in. There's no backing out of it. All that being said, a lot of noise for today. So no more posting on shorts, no more clickbait on those of you who subscribe, my future millionaires. I'll post a date. When I put the postings, I'll say the date and the time. We need to start focusing more on the day trading aspect of it. I don't know if there's going to be an advantageous situation to the day trade of cryptocurrencies. I'm trying to figure that out. Any insights that anyone has, things worth watching. For right now, I watched the volume. The volume is very, very light. There's not a lot for sale with 58 plus billion of them. And that's another reason why I'd have to think that the big money is going to gravitate to something like XRP. Something that has large enough volume to sustain tenths of a penny, hundreds of a penny. I mean, once you start to get 100, 200 billion XRP trading a day, slushing around back and forth, you don't need to make 3-4 cents on them, because some entity next to you is going to set up a trading situation, whether it's Fidelity or if it's Schwab or whoever it might be. Their ETFs are going to have a tighter spread. That's what competition is all about. That is why the Department of Justice protects that Burger King and McDonald's do not merge together, because then they can raise the prices of the hamburgers to almost whatever they want. They dominate. Can't have domination. You need competition. Competition is what brings out the best for the individuals. At least that's how it is in the U.S. Probably globally. Capitalism is extremely functional. It's almost like on your kitchen floor. If you take a cup of water and pour it on the floor, wherever it puddles, that's the low point on the floor. Capitalism will find the best price scenario, and it will create, with profit factored in, competition will give the individuals the best opportunity. So with all that being said, I want to thank you all for being here, and I'm sorry for bending people's ears, but if some of this is not understood, just replay it back. Those of you who do subscribe, I'm happy to have you on board. Love the comments. Hope you are subscribed. Hit smash, do the likes button, kick the no likes button, whatever you got to do. XRP, baby. It's going to happen.